Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. Before we get started, hit that subscribe button and turn on those notifications so that every time we drop a new video, you hear about it first. This week we have a couple of housing things to talk about, and then we need to put our eyes forward towards the end of the week where we have some key economic data coming out. First, let's talk about the updated renters-owners ratio. A report came out just last week indicating that 43.7% of all occupancies are now renters. This is the highest reading in 55 years, and I think it is actually a pretty clear insight as to what the scope and landscape of housing rentals versus owners is. Obviously, the data is saying that. However, it's going in an upwards trend, and it's likely to continue as we see price pressures on homes, interest rate pressures on the cost of borrowing money, and most people deciding that they may want to rent versus own due to the responsibility of having their own place. So when you mix in some of the tangible parts such as the financing and then some of the intangible parts as the appetite for being an owner, it's not a big surprise that we saw this number. And until things really change and we have more accommodative policy that allows more people to become owners, this trend's likely to continue. Next, we need to talk about new home sales. There's actually new home sales data coming out this week, but this is the battle of builders versus buyers. You see builders trying to hold the price where it's at. You see buyers trying to get into the new home. But of course, the interstate market has been a little bit cost prohibitive towards that. So I think this number this week is really gonna show us who's winning it out in this battle between the builders trying to sell the inventory and the buyers trying to get into it. Now, the two really big pieces of economic information we need to talk about are Thursday's advanced GDP reading. And this is because the previous 2 quarters, it was negative. And then everyone argued about whether or not that means we're in a recession. Putting that aside, what this really is important for is getting a reading on whether our economy is growing or contracting and what that means for quarter 4 and looking into 2023 and 2024. This absolutely will weigh in on Fed policy decisions that are happening this month and into December, and probably going to chart the course for what 2023 looks like. And that goes hand in hand perfectly with the information we're going to get out on Friday, which is the core PCE number. As I've been teaching you, the core PCE is the target number that the Fed is looking at to see whether or not they are winning in the fight against inflation. You may remember that in the last time we got the core PCE number, it was actually 4.9%, up from 4.6. So it went in the wrong direction. This week, what we're looking for is that number to stay the same or go back down. We definitely do not want to see that number going up above 4.9%. We need to see 4.9% or better, meaning lower. If we see that, that's going to give the Fed some indication that their efforts are actually starting to work their way into and through the system and applying the right type of pressure to slow down and then eventually course correct inflation back down towards their target of 2%. So what does this all mean for mortgage rates? Well, simply put, the low impact news will have low impact on volatility with rates, and the high impact news stuff might have really high impact when it comes to volatility in mortgage rates this week. And until there's a change in policy, this elevated rate environment is where we're gonna hang out for a bit. We're kind of like passengers on a cruise ship. You know, if you happen to be out on a trip and it's mostly cloudy with some bad weather and you get a break in the clouds 1 day or 2 days, that's an amazing, amazing day. But in general, right now, we have to be cautious of the tide that's changing around us and where it's gonna bounce us up and down in the rate environment, because we're really just along for the ride right now. We are also approaching that time of the year where if you're still trying to get into that new home by Thanksgiving or Christmas, you still have some time for Christmas, but that Thanksgiving line, you gotta be in and under contract probably this week or at the latest by Halloween so that you can be in, moved in, settled, and ready to welcome all your guests for Thanksgiving at the end of November. Now, those of you who wanna get in by Christmas, you still got a little more time, but as we've been saying, fortune favors the prepared. So if you're trying to get into a house still by Christmas or by New Year's, then you still have a little bit of time, but make sure you are updating your loan application, your approval, and talking to your loan officer regularly right now. And for those of you who still need to refinance for either tax or general purposes, there's still time to do that, of course, before the end of the year. And those of you who know you need to do that in 2023, have that conversation in quarter 4 right now so that we can best prepare to help you in the new year. If you're unsure about whether or not the market circumstances are right for you and what you're trying to accomplish financially, send us a DM, leave us a comment, or reach out to us directly so we can help you ascertain what your circumstances are, what solutions there might be in the marketplace, and what you might be able to do about it. Like always, please share this video with friends, family, coworkers. Let us know who else we could be helping win in mortgage and real estate in 2022 and prepare to win in mortgage and real estate in 2023. Thank you so much for watching. Have a great week, and we'll see you again next week.